Chapter 3 is going to continue on with our discussion of recording transactions, and we're going to be using the terms debit and credit a lot. So this is what you should be able to do now in accounting. Is anytime you hear a transaction, you should be able to take that transaction and know what two accounts are being affected. Okay? Just by reading the transaction, then you should be able to go ahead and know whether or not that account is being increased or decreased based on the transaction. And then from there, if it's increased or decreased, you should be able to tell me if they're debiting or crediting it. In order to do that, you have to know what is the classification. Classification is always asset, liability, owner's equity, revenue, expense, or withdrawal. Classification will tell you its normal balance. What you are going to find, though, in business, using T accounts is not going to be an effective way for you to be able to go through and continue on to keep track of what's happening for your business. So what we are going to use is we're going to use something called a journal. And a journal is going to be what we use to record our transactions. We use a T account to help us to understand how debits and credits are being affected. But now we're going to take that information and put it on here. So we're going to take a little bit of time first before we work on the assignment to look at a journal and understand what we see here. So here on the left-hand side, you're going to find that we have a date column. There are two columns for the date. The first column here is going to be the month. The second column here is going to be the day. So for example, we could put in March 3rd, and then here would be the 7th. You are going to use one journal page for each month. So at the end of the month, you would have a total, and that total gives you valuable information. So when we think about it, is it important for a business to know how much sales it had each month? Yes. So we would have a journal that would give us information on what is happening for that business within a month. So you will find that you will only have to put the month on there once at the very top of the journal, and then everything else will be for that same month. Okay? So right here, we have a column that says account title. Guess what goes in there? Titles of accounts, like prepaid insurance, rent expense, advertising expense, Mrs. Gressel drawing, accounts payable, Don's Quality Market. Those type of things are going to go here. Now, doc number. This is an important one because in order for us to journalize transaction, there has to be some sort of proof. So one of the things, some of you will go through and you will give me money for FBLA. Would you agree? And if you give me money for FBLA, what do I always give you? A receipt. Because that is proof that you have paid. So same thing's going to happen if you go to Don's, if you go to Quick Trips, right? You buy something, it's rung up in the cash register, and they have a receipt. They may ask you, do you want the receipt or not, right? But that receipt is going to go through, and that is proof that you have received that money. If I am going to go through and pay Don's, how am I going to pay Don's? How would I do it? Say it again, Aaron. I would give him money. What kind of money? I'm not going to do cash. Why? Am I going to send cash through the mail?
No, in the check.
I'm going to send a check. Would you agree? Because if I'm paying Don's, I'm not walking down to Don's and saying, here you go, Don's, here's my cash. Because I paid on an account, right? So I'm going to go through it and I'm actually going to pay with the check. The other thing is, I might have to send Nick to Don's to pay for me. And it's not necessarily good controls for a business if you send employees with large sums of money to go deal with payments. Would you agree? So businesses oftentimes are going to make payments using checks. Even though you might not use checks a lot, businesses are going to use checks. Okay? So I would write a check to Don's. That check is my source document to show that I paid them.
Right.
So anytime something happens within the business, there has to be some type of source document to show that we have to go through and take care of that. A receipt, a check, and that's one of the big things that section 3-1 talks about is going to be our source documents. The other thing that we're going to have is going to be a sales invoice. And a sales invoice truly is communication between me as a business and my customer. So if I had a customer that came to get a golf lesson from me, but they're going to pay me later, I'm going to create a sales invoice to say, all right, I gave you a golf lesson. Here's the bill, so they know what they have to pay later. So when we talk about it, sales is going to be affected, so we're going to create a sales invoice so that we would be able to collect that money later on. Sometimes we have to create something called a memorandum, and a memorandum is just going to be a note that would go through and document what happened. So for example, if I bought supplies on an account, so I would create a memorandum that would go through and document what did occur within that purchase. So any of my source documents would go here. Source documents are very helpful because I can look at a source document and I can understand what's going to happen. So here's one of the best ones. If your source document is a check, what account do you have to affect? What is a check? No, check is a source document. No, I'm not looking for, okay. Accounts payable kind of, but think about it. If I give you a check, Cody, I give you a check, what is that like to you? Money. Right? So if I write a check, what account has to be affected? If it's money, cash. Would you agree? So if I see your source document here is a check, I know what account's being affected? Cash. Okay? So, and here's the other thing. If I know that I'm writing a check, I am affecting cash. Do I have more cash or less cash if I write a check? Less. C check, C cash, C credit. They all go together. Does that make sense? If you are writing out a check, you are lowering cash. The decreased side of an asset is a credit. So those three C's will work together. So you will find that there will be a letter that will come before it, and that letter is going to stand for the type of source document. A C would stand for check. An S would stand for a sales invoice. An R would stand for a receipt. M would stand for a memorandum. I feel like I missed one. Those are going to be our four. So there will be a letter and there will be a number, because you will never have duplicate numbers. Just like if I were to write out to Kayla check number 72, I will never have another again check 72. The next check I write out would be 73, 74, 75. They're always going to increase in numbers. This column right here, do not worry about this column that says post reference. We have a whole chapter just on this column. So right now, just know it's always going to be blank. We'll get to it. Now, then we get to these columns right here. This is the fun. Woo! This is where we put our numbers. And I need you to realize that we have some general columns and then we have some special columns. I have 3 special columns on this journal. Okay? What makes them special? They actually have an account title on the top of them. So when I look here, look it. Is this an account title? Sales? Credit. So that means if I am ever affecting sales as a credit, I'm going to make sure that I use that column there as sales credit. Notice, does it give me an option for sales debit? No. You have never debited sales before, and you're not going to need to. Does that make sense? So anytime that you are affecting sales, it's always going to be a credit. So that's why it's only giving you one column here. So this right here is a special column. These right here are also special columns. You will see going across the top, we have the word cash, and it's spread above 2 columns here. So then we're going to have a debit and a credit column there for cash. And why do we have a debit and a credit column? Would we go through and debit both of them? Or debit, can we debit cash? Can we credit cash? Debit cash means we're getting money in. Credit cash means we're paying money out. So we're going to go through and debit and credit both cash. So that is why they're going to have a special column that has a debit and a credit. So these last 3 columns here are special because they have an account title. Now, every other account, prepaid insurance, accounts payable, accounts receivable, Mrs. Grassel drawing, advertising expense. All of those are going to go here in my general column. Why do they go in general? because they don't have a special column. Does that make sense? So, and here's the thing. If I use a special column for sales, I don't have to put the word sales here because I already have a column. If I put $500 right here in this column, what does it mean? I've affected sales for $500. So the only time you have to write an account title here is going to be if you use your general columns. Does that make sense? So going across, when we take a look at using this journal, you're always going to have to affect how many columns? 2, because we always affect 2 accounts. Okay. The other thing that you have to remember is you always have to have a debit and a credit. You can't have 2 debits. You can never have something in these 2 columns, debit, debit, or these 3 columns, credit, credit. You always have to have a debit and a credit because one account is going to be affected as a debit and one will be affected as a credit. That's the whole accounting concept. That's why we're still doing T account quizzes. We'll probably be doing T account quizzes for the next 2 weeks because you need to be able to know it. If I say an account, you should be able to say classification, normal balance, increase side, decrease side. So if I say cash right now, you should think asset, debit, normal balance, debit's increased, credit is decreased. That is what you need to think in this class. Anytime you hear an account title, you should be able to tell me classification, normal balance, increase side, and decrease side. Okay? If you're not into Aptly, go ahead and get there, please. Nothing's turned on, but it'll be turned on in just a moment. You will see work together 3-1 is turned on. It's due today at 9 a.m. Let's go ahead and open up the work together 3-1. You will see that 3-1 has a journal just like I was talking about. Our directions for 3-1 read, a journal is given below. Your instructor will guide you through the following example. Norm Dermer owns Dermer Copy Center, which uses the following accounts. Cash, accounts receivable, L row, supplies, prepaid insurance, accounts payable, Palm Supply, Norm Dermer Capital, Norm Dermer Drawing, sales, miscellaneous expense, rent expense, and utilities expense. It's important to know that those are the accounts that you can use. We're not going to use any other accounts. Then we have transactions. We have April 1 and April 2. That I'm not doing anything with. I need to get to my first instruction. My first instruction reads, journalize each transaction completed during April of the current year. Use page 1 of the journal. Source documents are abbreviated as follows. C, check, R, receipt. Okay, page 1. I want to point out something right here. Do you see right here where it says page 1? Each journal page is going to be numbered sequentially. So this is page 1. The next one would be page 2, 3, 4, 5. So as a business gets on and has been established longer and longer, you're going to find that your journal page numbers will be higher. Okay? Don't go ahead. Stay with me. How you do this matters. What you need to do is you're going to move across your journal from left to right. The first thing that we know is these transactions are being recorded in April of the current year. So I need to put the word April in here. You don't have to write the whole word out. You're just going to go ahead and abbreviate APR. The next thing that we know is the date of the transaction is going to be the 1st. So I'm going to put a 1 here. Don't do anything else. Stay with me. How you do this matters. The order, the process. Don't just randomly fill things in. It will screw you up later, I'm telling you. The next thing that we have is we receive cash from owner as an investment, $1,500, R1. Moving from left to right, how we fill out our journal, we know that the date is the 1st. The next thing that we're stuck with is we have to know what 2 accounts are being affected. Receive cash from owner as an investment. Brandon, what is one account we're affecting?
Please excuse the interruption. At this time, all juniors should report to the buses out front. Make sure you go to the bus you're supposed to go to. Again, go through the commons doors. All juniors should be released at this time.
Brandon, what's one account that's being affected for receive cash from owner as an investment? Cash. Okay, so we know one account is cash. Bryce, what's the other account we're affecting if we receive cash from owner as an investment? Owner's equity is a classification. Give me the account. Turn around and look at your directions. You have a list of accounts there to choose from. What would it be? Nope. Who wants to help them out? Ari, can you help them out? Norm Dermer Capital. All owner's equities are always going to be the name of the owner and then end with capital. Okay? So our two accounts that we're affecting, cash and Norm Dermer Capital. Before I record anything down, I have to ask myself, are there any special columns for these? And is there a special column? For which one? Cash. So that tells me right here, my account title that I put in there is going to be Norm Dermer Capital. So go ahead and fill that in. Now, when I hit enter, it'll automatically move me over to the document column. What is my source document? It tells me right in the transaction. R1. R stands for receipt. Receipts means somebody gave the business money. So anytime I see an R, I know that I'm going to be affecting cash. That is also another clue that I get when I look at source documents. So I'm going to go ahead and put in R1 here. Now, I have to go through and determine what columns I'm affected. We know that cash is being affected, and we know that Norm Dermer Capital is being affected. So do we have more cash or less cash? More. What's the more side of cash? Debit. So I'm going to go over here and put in a debit of 1,500. You do not need to put in commas, and you do not need to put in the decimal point. So if you do 1500 and hit enter, it'll automatically put in the 0.00. You don't need to put in commas. You will find that these columns right here on your journal, that this is going to be your thousands, you have your hundreds, and then you have your cents. That's how the columns are lined up. Okay, so I have my debit. Now, what account am I crediting then? Capital account, would you agree? Now, is there a special column for capital? So where does it have to go? General. So I'm going to go general credit for 1,500. So I don't always, when I get to the amount column, I don't always move left to right, but I always get to filling in the doc number and I stop there and then I fill in what I know first. Okay? Let's take a look at our transaction on April 2nd. Paid cash for supplies, $375, C1. Cole, what's one account that I'm affecting? Cash. Got it. Cody, what's another account I'm affecting? Supplies. Okay. Cole, is there a special column for cash? Cody, is there a special column for supplies? No. So what do we have to do? I'm going to start on the left-hand side. I'm going to put the date in of the second. What's going to go into my account title? Supplies. What's my source document? C1. C stands for check. 1 stands for the first check that's being issued. Now, I gave you a hint before. If your source document is a C, you're affecting cash as a credit. I don't mind giving you a tip like that. Anytime your source document is a check, it has to be cash as a credit. Always, 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 always. So then you know what's the other one being affected as. Debit. Okay, so I'm going to start with obvious. If I know it's C is a cash as a credit, I'm going to put 375 there. Then I just have to narrow down what am I going to debit. Well, am I going to debit cash? No. I can't affect sales, so where does it have to go? General. Check that answer. Bing, bing, bing. Now here is a big thing. I need you to realize, if you put the wrong source document here, you get the whole line wrong. It doesn't check for a point on each one of these. This whole line is 1 point. So if you put the wrong date in there, this whole line would be wrong. Slow down and get it done correctly. Try that on your own.